What's going on, guys? Good morning, good evening, wherever you are. Welcome back to another pre-market live stream here with the Everyday Growth Advisors. Hope you are having a good day so far. Now, I want to take a little bit of a moment to cover what the heck happened yesterday, and then we're going to talk about next week as well, FOMC expectations, and also this rally, which is oddly weird in mega caps. Now, yesterday what you saw was pretty much a perfectly executed gamma squeeze. But the thing about gamma squeezes is you don't typically know that they're happening until it's over. So hindsight is always 20/20, where you see the move happen and then you think that, oh, this is what happened. Now this morning PCE data came out in line with expectations, so that's not really bearish. So far it's just kind of meh data, right? Right now I think most of the important information that we're trying to ascertain is what is the Fed going to say next week based on the data that we have today. PCE was just up very slightly, 0.1% year over year, which, you know what, all things considered, not that bad. It just came in 4.2% versus the 4.1 estimate for March year over year, so it wasn't that bad for the whole PCE price index. That means inflation is on its way down, and the Fed may pretty much signal that they're gonna do a rate pause or pause the cycling of interest rates. So that might be something that the FOMC is going to focus on yesterday. Now, what the heck happened here? You can see a lot of liquidity got swept on this bottom below the NASDAQ key pivot. A bunch of shorts entered here. And what happened in this fashion is the market started to push upward after a bunch of ERs. They came out favorably. The first one to hit the sessions were Microsoft, and then you had Meta, you had a bunch of other stocks that were kind of doing really well for earnings, which pushed ultimately the price of everything up. That caused shorts to kind of get into a little bit of a helter-skelter. And, as the market started to melt up, more shorts started to get covered, which was a short squeeze. But then remember that there's another dynamic here that you need to understand, which is the dealer dynamic. And if everyone that is short is covering their positions and going long, then the dealer has no choice but to buy stock to compensate, because they themselves have to hedge against their own positions, and that causes ultimately a squeeze to the upside in terms of the derivative positioning that they have to take in futures. So that's what caused a lot of this rally yesterday, and then you can see that we swept a little bit of liquidity up here as well, and then came ultimately down. And today we are likely to possibly see what this is going to unfold for the session, which honestly right now at this moment I can honestly tell you that I do not know, right? Because there is no real way of knowing what the heck is going on here until we see a little bit of price action confirmation. Is NASDAQ going to form a little bit of a bull flag here? SPX didn't really make it all the way up. So SPX is relatively weaker to the market. Now, the other sectors that are also weaker are obviously semiconductors, which have been really sluggish for the past couple of days, but this is no surprise. We've been talking about tech and semi being weak for hot minutes for at least like 3 weeks or 4 weeks. Now, the news just dropped today. US semiconductors, slew of negative data points and semi signals, and a rarely auto weakening, price weakening downturn ain't over yet at Citi. There have been a slew of negative data points over the past week in semis, culminating in ST Microelectronics admitting pricing pressure will begin in the second half of 2023. That is waiting on analog names. We believe negative pricing will spread across the space and will result in lower estimates, and note our C24 EPS estimates are 14% below consensus on average. We have remained cautious on stock due to our belief that the automotive space would correct and pricing would revert back to historic norms, down almost every year, and this appears to be materializing. Our top pick remains ADI because of its defensive nature. So you can see a little bit of that data coming out this morning. So our find on the prime book data that gave us the signal about 3 to 4 weeks ago was really on point here. That gave us this little wave down on semis. Now, it doesn't mean that we can't buy up here, and doesn't mean that NASDAQ can't continue to the upside. We just have to be cautious to see what happens with price action today. The other sectors that have been kind of weak have been energy, which has been seeing a little bit of outflow. Financials have been also kind of sluggish. And then not to mention consumer discretionary that has been trying to break out for a while. Utilities actually saw a little bit of a sell-off yesterday, but got bought up pretty quickly. So that's one that we have also been watching. Communication, obviously a big buy-up because of Meta, right? And real estate also a little bit of an inflow yesterday. So that's been pretty interesting. Apart from that, consumer staples seeing inflows. We'll see if we can actually get a breakout here. That will be your staple goods, Coca-Cola, your Walmart, your Target, things like that. So yeah, that's kind of the things that we're looking at. Obviously, technology was a very strong sector yesterday. So we'll be continuing to watch all of these as the market unfolds today. Now, the other thing is the VIX, momentarily came up to that $19 plus and got smashed again yesterday, signaling the coverage of hedges, and obviously shorts got squeezed, so they must have covered as well. That caused the market to kind of rip to the upside once again. Now, as of where we are right now, it honestly is a little bit of a gray area. Like, for me personally, this is not very obvious price action as to tell me what's happening here, because we did bounce on a key pivot at 41.15, kind of in the AM session today, or rather, in the Asian session, so to speak, right? So that's something that we're also looking at, possibly a retest of 41.50. But then next week you have FOMC, and then you have, a bunch of data that's going to come out also, and then Apple's reporting earnings as well, 2 days after FOMC. So that could be very well a market mover or a needle mover as well. Now, a couple of things. So there's an important dynamic here that you need to understand. Now, why are people buying mega caps? This is an interesting dynamic that we've seen in the past 2 days. And it's majority of the reason why we got short squeezed to begin with, or gamma squeezed, right? Well, it could be viewed 2 ways. The first way is obviously the market's a bit resilient and it's thinking ahead 6 to 8 months from now, where we're seeing possible recession come in, and through that period of time, investors are going heavy on strong balance sheets, which are your mega caps that are performing right now. Majority of them include your Google, your Meta, your Microsoft, Amazon, Netflix, right? And majority of these have all posted favorable earnings. Apple hasn't yet. And obviously, so investors are kind of flocking to that. Now, there's two ways to interpret that. One, that the economy is strong, and investing in these, strong balance sheets are the way to go. The second way is to say that the economy is weak, and that's, not specifically a good thing. That's the reason why they're buying mega caps, and so they're expecting the rest of the market to be weaker. And you can kind of see that is playing out within the price action in Nasdaq versus the S&P 500, which is something of a dynamic that I am watching pretty closely, because if S&P 500 keeps weakening here, then the Nasdaq eventually has to lead this rally in some way. So that's some dynamic that I'm watching, and honestly, it'll be something that we'll have to see in the next week. Now, in terms of the bond market, this morning we saw pretty much the short-term end of the bond market, or short-term interest rates, futures down slightly, as traders are adding bets to the Fed possibly hiking more after the inflation data that just came out. Because you can see the bond markets the yields are all down roughly about 2% on the fat tail, and then on the short tail you can see the 2-month yield is up about 2% today. So short-term uncertainty is back again. This is an interesting dynamic. Obviously, I'm going to do more analysis of this and give you guys more insights as we go along. But this is just something that is developing right now. Not to mention, the dollar index was initially and briefly spiked up this morning, but then now saw a little bit, a further move down. So now, if the dollar continues to persist to the upside, then that's going to give a little bit of pressure to equities to the downside. But if the dollar continues to fade away, then equities will gain their positioning back. So it's really, really a tough week to trade. If you're a trader in this week, it's a tough week to trade. I would give yourself a pat on the back if you did well this week. Personally, I made a couple of mistakes this week, but main account didn't really make any mistakes. We played this down wave pretty strongly, managed to close out some really nice profits on SPX. But what mistakes were made on the small account. Obviously we still have time for this to play out, but I'm not going to get my panties in a bunch and try to be very optimistic about this, because I think that there's a very real chance that I'm going to lose, or I'm going to make a couple of losses from these trades that I've taken on NVDA and QQQ, and you're just not going to get it right all the time. That's just the reality of the situation. I did take an NVIDIA short, when NVIDIA was very weak here. The market conditions in Nasdaq and the market conditions in the mega caps have caused this one to really hold up. And we really want to see this weaken into next week. I don't know if today's session will give that to us, but for the time being, I'm going to hold the shorts heading into next weekend. So we'll see how that plays out. So then the other one was QQQ, which I took on this kind of break further down here, and then it got short squeezed, and I was a little bit busy, so I didn't really pay attention to this trade, and it kind of got away from me. But you know what? It is what it is. Yeah, as long as you have risk management, and obviously I'm going to manage the risk on these positions. If I get a wave down, I'll average in a little bit and get out. But yeah, I like to be transparent with you guys and be as it's important for you guys to understand that even I make mistakes. It's not like I'm gonna not make mistakes at all. So a lot of I guess mistakes were made on the small account this week, but you know what, it's not something that we can't get out of, or not something that we can't fix. So I think in the coming week or so we'll be able to play that a little better once I get a little bit more of the direction. I feel a bit disconnected with the market right now, and that's the reality, and that's the truth. And this happens from time to time, because when you get a short squeeze or a gamma squeeze to this degree, it can be very unnerving. You don't really understand what's going on. You don't understand the dynamics. And so right now, what I'm trying to do is reduce my position sizing, reduce my risk, take a little bit of a breather from the market, and avoid revenge trading at all costs, right? Because that's really the main thing that you need to focus on. Controlling your psychological aspect and the mental bandwidth is going to be a key thing here, while the market fixes its own reparations. So I'll be kind of trading lightly in today's session, making sure that I don't do anything more stupid, because mistakes can compound very easily. So you have to really take a breather. Take a breather. Give yourself a bit more time. Give yourself the benefit of the doubt that you just got yourself into a position based on wrong decision, or and make sure you admit it to yourself, like how I've just admitted it to myself, that some things are just beyond your control and you're gonna get clapped. It's part of the game, right? Can we go long put on Amazon with AWS slowing down? Can we go long? Well, I mean, if you're planning to take it for a long expiry, personally, I have said this for a very long time, that Amazon is going to lose the battle against Microsoft, and eventually I see Microsoft being the higher market cap than Apple even. Now, I wouldn't honestly go outright short on Amazon, because they do, have the capability to be somewhat resilient. Now, I know the earnings report was like very lackluster in terms of guidance, but I think you should let it play out and see what the price action tells you when it approaches a pivot. You want to go short only if it goes up to like 114, in my opinion. And if you want to go long, then you have to kind of wait until 102 or even 98 or 94. Like, these are all the key pivot levels on the downside. If you want to take an outright short, then yeah, you can. I mean, it's not a bad idea. If you want to play the weakness after the earnings, it's not a bad idea, Santosh. I'm just saying, be cautious. This is a week where, things are a little bit messy. And then next week you have FOMC. So, yeah, you got to be aware of that. Now, let's talk about FOMC real quick, because, I want to kind of get this expectation in before next week and give you guys the lowdown. So, 25 basis point is already kind of baked into the expectation. And now I think the market's going to slowly price in the possibility of an additional rate hike. So we'll see that play out in the bond market, and then concussively, in today's trading session, we'll see how equities react to this in this session as well. So I think once we can kind of figure out where the federal funds rate traders are pricing in bonds, I'll let you guys know as soon as I can on the Telegram group or Discord, and then we'll go from there. But right now, I don't have any data that supports my hypothesis at all, and so it's not necessary for me to make a judgment call on that. I think that over the weekend, a lot of data is going to hit, and that's going to allow me to kind of get my mojo back. Sometimes my mojo is off, and that's just the way it goes. To be frank, we've had 2 whole months, or maybe even 2.5 months, of pure perfection in terms of figuring out every move here. And one little gamma squeeze can really throw you off your game. It can really, really throw you off your game. And this is the reality of trading, guys, okay? One little move like this can throw you off your game, because then it makes you doubt yourself. Oh man, was I what was I thinking? Why didn't I see this coming, right? And the reality is, you're not going to see it coming. You're never going to see it coming. The market's going to pull moves like this all the time. You just have to be mentally resilient to notice and admit that you won't see it coming, and just circumvent these issues by risk management, right? So that's all I'll be doing. I will be taking a step back, lowering my position size, trying to pretty much build that consistency back again. And then once I'm back in the zone again, boom, right? We're back in the game. So when things like that happen, don't let it get to your head. Don't put yourself in a position where you tell yourself like, oh man, now I'm so fucked, like I don't understand where everything is going and this and that, and you start putting yourself in a situation where you get severe imposter syndrome. So don't do that to yourself. I mean, I felt it for most of yesterday, and obviously I'm very transparent and honest with you guys, because that's just the way that I've built EGA over the years. I never ever keep anything from you guys in terms of where my mental state is at, what I'm doing in life, etc., etc. So I'm always, I try to be as upfront and transparent with you guys about what my journey is like. And reality be told, the main account is doing completely fine this week, but it's a small account that bugs me. It bugs me that I took on a little bit too much risk at a time when the market squeezed, and then I didn't manage that position adequately. This pisses me off more than anything. Remember that more than people holding me to a standard, I hold myself to a standard, which is the irritating thing, right? So when you hold yourself to a higher standard, then these kinds of thoughts come into your head, and you tell yourself like, man, you could have done that better, right? So it is what it is. You don't scry over spilt milk. You just roll with the punches and figure out what the next best move is. And so I just wanted to come on here, give you guys, open up to you guys, be as vulnerable and let you guys into my mentality, because you're not always gonna, hear that from most people. And the reality of it, being a trader at this level is tough, okay, when the market is this uncertain about the future. So I hope that, if anything, you learn from the situation, or you learn from the way that I analyze the market, or you learn from my experience. That's the main takeaway that I hope you take away from today's live stream. But if you have any questions, post them in the comments. I don't have any opportunities for you guys today. If you guys want me to cover a specific ticker, go ahead, put it in the comments right now, and I will. I'll get to it. Small accounts are harder to manage for some reason. I completely understand that, T. Yeah, Scotty. That's the thing. With the small account, I can't quite get myself out of these positions very easily, because averaging down massively here would put me in more risk for absolutely no added benefit of the risk-adjusted return. With the main account, though, I could do that very easily, right? So you see, the main account's up 20 grand this week because risk management here is so much more easier. I have a lot more capital to play with. And obviously, for those of you that don't know, this account is not really that huge, okay? I only trade with 100,000, and I keep 100,000 just in case I need a hedge or the market goes wild, right? And then whatever profits that I get making from the main account, like this main account, which is currently up at around $300,000 for the year, right? And we started with 100,000. I usually chunk that profits into buying shares, right? So it's a very different dynamic when you're trading with $5,000, and obviously the small account is still up $500 for the year, right? So even if I lose 50% of all of these trades here, which is roughly about, what is this, $1,200, that's about $600. It pretty much puts me in a position where this small account is reset to $5,000. And you know what? I know that sucks, but you know what? I'm hoping that the market will give me some kind of a move further downward, and that will put my contracts in a better position. I'm not pinning my hopes on it, but one can never expect or know what the market's going to do. So we'll see what happens. Okay, Tesla. So Tesla is an interesting one right now. Definitely looks temporarily bullish. Okay. Now, the last live stream that I held, I mentioned this is was a very key level for Tesla. We didn't actually get into there. In fact, we didn't even close the gap down at 146 even. And what happened here was Tesla kind of came down into this 151.80 level and bounced pretty strongly from here. There is a possibility for a mean reversion play, probably up to, like, let's say around, I would say something like here, right? So you're looking at pretty much like without the gap fill. So I want to say around 170, right? 170. But once you get to 170, you have to be really cautious. So I would, if you want to play Tesla today, I would day trade it, and I wouldn't try to swing this one, because it's kind of risky still. It could, come up to 164 and then reject. I would day trade this. This is pure and simple. There's no reason to swing. I wouldn't hold it through the weekend personally. To answer your question, Eddie. So I would kind of day trade it up. Maybe it has a pretty slim upside, to be honest. Like, this is you're talking about a $10 upside. I mean, it's not super terrible, but remember your downside's also around $8. So your risk reward ratio, yeah, it's not that amazing, right? So I mean, and remember, I'm looking at this on the 4 hour, but if you look for your intraday planning, look on the 1 hour and you'll see what I mean immediately, right? So this is your upside kind of, if you look at that mean reversion level, and this is your pivot for cutting the trade pretty much. So you have your entry somewhere here. Your risk reward ratio is literally equal. So yeah, I personally don't like the setup, but as I said, scalp and day trade could be okay. Scalp and day trade to the upside could be okay if NASDAQ continues with its strength. Okay, so that's going to be a big caveat. NVDA. So this one, it has been really all over the place the past couple of days. Formed this ascending wedge, came down here, closed out, and then earnings happened for a bunch of NASDAQ stocks, and then it got bought up. This has been a very difficult stock to trade in the past, 2 months, I would say even. So with NVIDIA, I think right now, the best thing to do is wait for this fucking thing to pick a side. It has not been able to pick a side. We thought that it picked a side. I was very certain that it picked a side when it started breaking down here and started, making its way down. I thought, okay, at best, what's going to happen? It's going to kind of come up here, retest this trend line, and then possibly reject again for the downside. But look at what happened. It gapped up and then squeezed all the way up. Now, these kinds of things, they are outlier moves. They don't happen very often. Gaps and then coming back into the range that it was at. This is a kind of a market manipulation move, right? So to me, it just seems like, they're trying to hold NVIDIA up here as long as they can to hold all those players out and trap them and get as much premium as they can before actually slamming it down in the future. So with NVIDIA here, I don't want to trade this anymore, especially since the small account got burnt on it a little bit, right? So I would take exercise caution with this one until it breaks firmly below 264 and then starts making lower lows. Then I'll probably take a short position on this once again, right? So that's the way I would do with NVIDIA. Unfortunately, we were right. Trust me, like we were right with the plan, right? We shorted it like literally here, right? And then we shorted it here again. And don't get me wrong, we made money on NVIDIA on the way down. We did, right? Last week, right? You can see on the small account we made NVIDIA. We made some money on NVIDIA, right? A couple of weeks back. Sorry, the main account, not the small account, right? We made some money on NVIDIA last week. But then this week, it has been challenging. It's been very challenging. And you have to adapt your mindset. So I wrote a little bit of a blurb on our Discord this morning, kind of just explaining the situation, what happened with the gamma squeeze, what happened with all of that. And it's really important for you to check your mindset before you get into this trading session. So that's all I have for you guys today. 5 minutes left to the open, so I'm going to jump on the Discord with the team right now. It's probably going to be a very risk-off day for me today. Just managing my positions. Until and unless I see a big drop in NASDAQ or a big move down, then I'll likely take some additional risk. But this is actually a good spot if you want to take cheap hedges for next week's FOMC. If you want to buy a hedge for your portfolio, this is a good spot to take one, right? And remember, if you're going to take that hedge, remember that you're intending for it to go to zero. Okay, Netflix. Okay. Okay. So this one is pretty much in a pennant style, right? So you can see it's been pretty much trading in this range for a little bit here. I'll show you right now. So I think it's going to continue squeezing here, personally. This is what Netflix is kind of doing right now. So this here, put this here, and here. So you have two key pivot points on Netflix. The first one's up here, and the second one is down here. We are a little closer to the downward pivot point rather than the upward pivot point. So you're looking at two specific moves here. Either a move up here, a potential breakout, and then you've got to be really careful of this 347 level. It's been a past rejection multiple times, and then also support. So this is a dual zone right here. You want to be aware of this spot right here. Is a careful area. And then the downward pivot is going to be this right here at 317. So I would say break down, retest 317, and then rejection. That gives you your downside extension. First targets will be pretty much around this area. You can use a fib to use and plot what that levels are. And then for the upside move, the upside move is actually really not bad. It's the risk to reward ratio wise, it's great to the upside. The downside will only be good if you break firmly down here and then get that rejection, back test here for that move down. If you want to take the upside move, you got to also get a little bit of volume, but I think it's ideal if it comes back down here to retest and then moves to the upside. That's kind of what you want to see. So I would use 317 as the key pivot. And then the other pivot that is going to give you that bullish entry is going to be around 335. So, that's what I would say with Netflix right here. Yeah, I just covered Netflix, man. This is Netflix. This is Netflix right here, Scotty. So, yeah. That's all I have for you guys. Smash the like button on the way out if you can. I truly appreciate you guys taking the time out to be here. And I'll see you guys back on Monday again for another pre-market stream. Take care till then. Remember, days like this are even going to happen to me. Many of you would think that, T always knows the answers, but it's not really true. I obviously also go through these challenges, and I'm human after all. So, yes, obviously, majority of the time I have my shit together and I know what the market's trying to do. But days like this, you just gotta suck it up, and you gotta put your chin up and keep walking forward, and take a breather. So, I hope if anything, you're inspired to learn from the lessons that I'm trying to give you, and that's all about it, right? Okie dokie. Remember, it's never going to be all green. There's going to be some red in your trading career, so remember that. Have a good one, guys. Take care, and I will see you on Monday. Peace. Love you all.